Good evening. Ira Epstein, and here we are with your SPDR ETF stock market wrap-up. And this wrap-up is for Monday, the 16th of December, 2024. We're getting ready for the holiday period. You know, next week is Christmas, then the week after that, New Year's, and then we're into a brand new year. I don't know how your trading's gone, but I'm really proud of this year. It's worked out nice. From my perspective, at least, you know, everybody's got the idea of nice and what they expect, but it's been a pretty interesting year. In terms of what we're waiting on, you know, the market is marking time till Wednesday, and on Wednesday, I think it's going to be a non-event. I think that the Fed chair is going to come in, Fed Chair Powell, and say 25 basis point cut, and that the Fed's going to be data dependent and they'll see where they're at. We're going to get the dot plot. We'll all pour over it and try to get an idea how many interest rate cuts are in store for 2025. I don't think it's going to be many. I think that the new neutral rate is not going to be 3% or 2.5%, but I think it's going to be closer to 3.5%. Maybe a shade higher than that, and that's because inflation is acting stubborn and the labor market is in good shape. Now, why will the Fed cut? I can make an argument that they shouldn't cut. But, you know, when you look at the whole crowd around you, okay, so whether they do or don't, I think it's a non-event anyway. So making that bet, it's not as though there's going to be a big thing here. I think the surprise would be no cut. It would tell the market that the economy is much stronger than the Fed thought, and I don't think the Fed likes to surprise. That's why I think you'll get your Christmas cut, and then the Fed can sit. I think January will be off the table, nowhere near coming about, unless something dramatic changes in the market. And I think we'll be looking at March for the one after that, which I like because the market can go back to looking at how did the quarterly earnings go, what's going on here, are we getting too expensive, what is the market looking at? Now, when you take a look at all this, do remember that the underlying futures markets for all these, the underlying, all went over to the March contract, all right? Amazon is still on fire. Apple is still doing very well. Boeing took off today. So here's a market that's up another 350. Rivian is doing well. That came back up today too. So as we look at all this, let's get a feel for where we're at. One of the markets that I wanted to cover is ARKW, not the typical ARK fund. Kathy Woods has different ARK funds. So this one's the ARKW, and it's the Generation Internet ETF. And I like the individual stocks that make it up better than regular ARK. Now, has it done well? Give you an idea. As you know, she has been under the gun for a year and a half. I mean, she got out too soon. She had NVDA, loaded up, and got out. Missed the whole move. I can go others. But she did stay with her Tesla, and Tesla has been a big savior for this. But this was a stock down just recently. It's $64. It is now sitting up here at 120. So let's give credit where credit's due. That is a 50% gain in this fund, and it beats the heck out of a lot of funds that have been doing what? Now, and I'm just giving you from this point in time, got it? So I think that's fairly important. The trend is still up with higher lows, higher highs. The market has support back at 112.27. Where do you think the resistance is? Well, we know it's not these two numbers. They're under the market. So it'll be the Bollinger Band around 121.51. Each time the market's hit it and gotten over it, it pulls back and lets the traders play with it. And it's had an embedded reading that it lost for a moment, regained it. So it is still very much in the bull mode. And next resistance right above you. It's not too far away, about $1.50. I wanted to come back to Oracle. I just didn't want to drop it. It never did fill this gap. So there's more wrong with the stock than right. The market had every reason. It even tried to come up here. And then what it turned into is what we call that gorilla glue trade. It's when a market latches onto a Bollinger Band and just starts riding it. And what it does is it starts causing the momentum in the slow stochastic to come down. So you're in oversold condition. It would take to the end of the week for it to embed, because it's not there now, to the very end of the week. And embedding would be a very bad situation for it. I don't think it's going to happen. It doesn't have a current history of trying to do that. Each time it has, it did it for 3 days and then snapped back rather dramatically. But it's not bullish. Could it be making a statement it wants to get to the 100-day? It could be, and that would be in the 163 level, about another $8 lower. CrowdStrike. I think I got mixed here in my feelings. Number one, it's a new high on the whole move. I was hoping the market was going to churn more here and give us a better setup. The pattern is one where you've got a lower low, higher high. It's not a tradable pattern. It's instantly overbought, and it jumped over the Bollinger Band. That doesn't mean it can't go higher. It's not a good trading pattern. I could care less about the name on the chart, by the way. I care about the pattern. That's what you're trading at the end of the day. Rivian. This is a stock that I told you at $10 I think could make a move. It's now up 50% in just short order since November. So up and away, and I've told you I think this is a real auto company. You know, once you had Volkswagen buying in and other companies buying into their technology, whether you like their trucks or not, they've got a technological marvel going there. And of course, you know, I like the fact that they're building all those Amazon trucks. You know, that's another cool thing. K-Web, you know how negative I am on China. And now you're right back down into a bear trend. You closed underneath even the 18-day average. This market could sink down here. As long as China doesn't offer how they're going to get things done, the market doesn't believe them. You can say we're going to grow 5% next year. How? You can say the property market, we're going to support it. How? We're going to cut rates. To what point? It's details that the market wants, and they're not getting it from the Politburo that met, so the market punishes it. Toll Brothers, okay. I thought here would be the big support. The market latched on and developed that gorilla glue trade. Now you're down to the 200-day average. Now, I have no intent of even thinking the short side of the home builders at a chart point like that. Throw the name off the chart. Would you want to go short down there? You might. I want no part of that if I'm teaching it my game. And S&P, same thing in the home builders, okay? You're just latching on and falling apart. Why? Because interest rates are staying high. Because homes aren't falling in value. Because the other part of it, remember, these are the home builders, not the other. What's happened is there's not a lot of supply and not a lot of people with the money to meet a 7% mortgage with the high down payment that a lot of mortgage companies want. And can people afford those payments? That becomes the problem. Last part to it, while it's beautiful in sunny Florida, not necessarily, by the way, December and January, having lived there, I can tell you that, it's not that way in the Midwest. People aren't going home shopping this week. If I'm a realtor, I'm on vacation. You think they're doing that on the East Coast? Well, I wish you the best, all right? After the first of the year picks up again, people start getting ready for the spring market. Hey, honey, I want to buy a house, or I want to put my house up for sale. Maybe we should go, blah, blah. This is that washout, I think. In XLF, in the financials, nah, don't want any part of it now. Now the market's, it's too much weight from these rates not falling. I thought it was just a correction. It's more than that at this point. It is too oversold to pursue, but the market got ugly very fast. In the industrial production, well, we're going to find out tomorrow what some of the numbers look like from the Fed, but it certainly hasn't been good. Did you see the New York Fed numbers, the Empire State today? Not New York Fed, the Empire State. So the Empire State last month showed expansion in manufacturing up. I was shocked. I think it was 31.2. They were looking for a setback today to a reading of 15, but it would still be expansionary. What if I tell you it came in at 0.02? That's the biggest swings I've seen. Don't know what's going on, but it's not bullish, this market. In XLE, now look, this is what you call one of these vertical washouts in the market. And this is the energy sector. So these are the refineries. This is the drilling. Do you think they're getting new business? Does it look to you like under Trump they're going to be real busy right here? In the gold market, we got up 3 days ago, hit the upper Bollinger Band, and I realized there's the naysayers out there. I could care less. That is where I told you I think the pros were coming out as you were overbought. I view any reading in the slow stochastic over 70 as overbought. And the first time you hit it, a rule of thumb, take money off the table. I don't care how much you do, take money off the table. That's up to you. I know what I do when I teach you in the morning my ideas. Here I don't go into all that, but that part worked. And the same thing worked in the silver market. And people were jumping up and down, I know, at the silver's going. I had wise guys, they always write on the news thing. They'll never say they're wrong. It's somebody else is doing phenomenal, or they're doing phenomenal, or whatever it is. You're not doing so phenomenal. This is a market that just went from 28.20, it's down $1. It's 5% lower in no time at all. Copper falling out of bed. And I'm going to repeat, China, China, China. If China's not doing anything to give us ideas, the market's going to punish the metal markets. If they come out with what their ideas are, even if they're not the best, that'll be the bid in the market. We're not getting it yet. BND and TLT still falling. 441 in the 10-year notes isn't a 4.2 or a 4.9 that we've recently seen. In the dollar, you go in with the dollar or short the euro into the report from the Fed and see how you fare. You know, I'm telling you, I strongly believe a 25 basis point, but I think it's in the market. Now the question is the reaction to all that. Are you trending? You are not. You're sideways. Lower low, higher high. I recognize that we're near the highs, so don't tell me if I go to the weekly charts, I know we're in an uptrend, but it's not a tradable one. The market's not giving you those type of swings, and it's overbought, at least from my technique opinion. You've got the flip-flop in the euro, higher high, lower low, and coming back to the 18-day average to fight a battle right through there. You could get another sell signal in this market if you take out today's lows tomorrow. That could start that part. So you put it together, you try to come up with game plans right here, and you don't want to get real crazy in front of the holidays, all right? You know you're going to walk into thinner type trade, things of that nature. But it's a great time to learn. It's a great time to get yourself set up because come January 3rd, you want to be pulling the plug. It's like automatic now. Right after the holiday, it doesn't take weeks to get the market back. People can't wait. It's like, you took my trading away, I want to go back. It's what happens. I talk about this and a lot more in my complete futures research, and I want you to try it for free. And that's all I ask. Give it a try. What I think you'll find out is I write 2 updates a day, Monday through Thursday. I write one for Sunday night. I write one again Friday morning. So you're getting those. There's sometimes I do special reports, but I no longer write them. You've already seen the one that I did where I was trying in the S&P to predict the bottom would be around November 19th, and that absolutely took place. Now the Santa Claus rally is the next one up. Will that take place? I can't answer because the buy dates for that are just fitting in. So we will see if that works or doesn't work and how that one goes. But that's only part of it. So you get written commentary with specific buy here, sell there, here's the stop orders, here's the get out type of way to come, and all my special reports. Just go to iraepstein.com, free offers. You can move your cursor up here. There'll be an icon. Give it a try. I'm Ira. I'll catch up with you all in the morning. Have a great evening.